Today, we are going to understand distinction between capital expenditure and revenue expenditure. Capital expenditure is also known as CapEx, whereas revenue expenditure is known as OpEx, that is operating expenses. Capital expenditure is shown in balance sheet, whereas revenue expenditure is shown in trading or profit and loss account. Any error is committed in identifying whether it is a capital expenditure or revenue expenditure, then the results may not give true and fair view of the business enterprise. We need to be vigilant while identifying these two expenses. Both have the word expenditure, but both of them means that we are spending money in a different way. Suppose Mr. Vijay has done following expenses in a year, but now he fails to bifurcate them. For this, he seeks our help. Students, it's very simple. We just need to keep few points in our mind. Our first point is any expenses whose benefits can be availed over a long period of time. Second, it increases the value of assets. And third, it is a non-recurring in nature. Keeping those points in mind, let's now identify how many of his expenses are capital expenditure. The first one is property. Property, the first point we need to remember, is it for long term? Of course, yes. It increases the value of assets? Yes. And it is of non-recurring nature. So property fulfills all the conditions of property is a capital expenditure. It is to be shown in balance sheet. Next comes salaries and wages. This expense is of recurring nature, that is day-to-day expenses, and its benefits will be exhausted within a year. So it is a revenue expenditure. Repairs. The next term is repairs, and for this repairs we have two parts, a major repair or an ordinary repair. If we are doing any kind of major repair, so it will be shown in capital expenditure, and any other minor repairs whose benefits can be exhausted within a year, that will be called a revenue expenditure. Legal cost, since the benefits can be availed over a long period of time, it is called capital expenditure. Again, rent, whose benefits will be exhausted within a year, we cannot take its benefit over a long time period. Same goes for taxes. Entertainment, research and development can be of two types. It can be of capital expenditure or revenue expenditure, depending how Mr. Vijay has spent that amount. The differences between capital expenditure and revenue expenditure are: it is incurred for acquisition or erection of asset. That means capital expenditure is done either for acquisition or for erection of an asset, while revenue expenditure is done for running of day-to-day business. Our next point is increasing the earning capacity. Whenever we do capital expenditure, it increases our earning capacity, while revenue expenditure are just done to maintain its existing earning capacity. Capital expenditure are shown in balance sheet, whereas revenue expenditure is shown in debit side of trading or profit and loss account, depending upon the nature of expense. Benefit of capital expenditure can be availed for more than 1 year, and the benefit of revenue expenditure is exhausted within 1 year. These are the following examples of capital expenditure: furniture, plant and machinery, whereas example of revenue expenditure are insurance, rent, salaries, repairs, etc.